All right, good day, traders. This is your free video update from Seasonal Swing Trader. Today is Tuesday, April 20th, 2021. And today our attention comes to the Russell, either the midi Russell, either RTY for futures traders or IWM, the ETF that tracks a Russell 2000. You'll notice here right near the middle of the chart, we've got this large topping pattern right here based off a 15-year historical price perspective, as well as this peak right here, which is the 5-year historical price perspective. You'll notice at this period of time in the calendar year, which is April 29th, we tend to make a top. Does that mean that it's going to happen this year or next year or the year after? No. This is trading in line with high probability seasonal odds, showing us that around this time of the year, end of April, coming into May, that we typically tend to top out or make a short-term top or peak in the market and trade to the downside. Now the reason that we are looking at this, because we know based on past experience that does hold true, and that's backed by hard data, in fact 15 years and 5 years. Now, so I was interested to see the stats on a little bit more granular level here, and so I pulled up our Smart Seasonal Stock Scanner and ran a scan on IWM to see what type of other data or activity we had. And sure enough, we were able to confirm we have a high probability seasonal trade on April 29th with an end date of around May 14th. It's about a 16-day calendar hold. You can see it's been profitable 82% of the time over 11 years. Average profit on the trade is about 2% or $230 per 100 shares traded. Of course, you could trade bear call spreads, buy put debit spreads, and so forth, or trade the underlying either IWM or RTY E-mini futures. So you can see it's been a very consistent trade year over year. We had a loss there in 2013 and again in 2018. Of course, a strong year in 2020. Let's dive into the charts though and see what we're looking at. From multi-time frame perspective, we have a monthly, weekly, and daily. You see that we are getting a kind of a turning point or rounding top here on the monthly. We had a shoot up, very strong parabolic move going all the way back to the March, April COVID lows. Getting a little bit more exhausted as we got up into these levels. Put in a little bit of a reversal candle last month, settling more in between, not quite a doji but close, and then we're following that down, trading lower for the month of April. Now over to the weekly, we're getting that additional confirmation here. We're starting to break this long-term trend channel as we speak with this week's weakness. And then finally, we like to place our trade ideas off of the lower time frame, in this case being the daily. Notice here that we have on the daily chart, we have a broad-based head and shoulders top. Now, one of my favorite setups in all of trading is to trade with high probability seasonal data in line with a high probability technical pattern. In this case, a head and shoulders pattern. We know head and shoulders tops, head and shoulders bottoms are very high probability, typically anywhere from 75 to 85% win rates over time. The profit objective it's a very mechanical signal. We know our risk and our profit objective. We simply measure from the head right here down to the neckline. And for those who are not familiar, we have a left shoulder, a neck, a head, a neck, and then a right shoulder, hence the head and shoulders top pattern. So we measure from the top of the head down to the neckline. You can see that runs us from about $235 down to about $210 or about $25. So that takes our entry, so the entry on the head and shoulders on breaks and closes below the neckline, which would come in right around here at 210. And our profit objective is measured from the head down to the neck. Again, we said that was $25. So that takes us from about 210 down to about 185 into this past area of price structure. And remember, when we're trading, we like as much confluence as possible. So I have not done this yet, but I would say that this is probably going to run us about a 50% retracement from this high down to this last swing low. And so let's do that exercise. We take a measure from the head down to this swing low right here, And lo and behold, it takes us right to a 50% retracement level. This is all lining up pretty good. The Russell typically is a leader for the rest of the indices. So if we start to see stronger breakdowns here, we would expect to see the same in the S&P, NASDAQ, and Dow. Again, nothing to do right now. We're waiting and watching, just showing you that the market does look a little weak here as we're starting to crack this long-term upward channel going back to September. And the Russell, if we start getting below 210 and holding below that level, that would give us a higher conviction to start being short stocks, or at a bare minimum loosen up on our long position. So that's what we're looking at heading into the end of the month. If you have any questions, reach out, support at seasonalswingtrader.com. Good luck, good trading. We'll see you on the next update.